According to IPO filings and market reports, Elon Musk's SpaceX preparing to go public on Nasdaq under the ticker symbol SPCX, with trading expected to begin on June 12th following final pricing on June 11th. But this isn't just another Wall Street debut. At a fixed offering price of $135 per share, SpaceX plans to sell more than 555 million shares and raise an unprecedented $75 billion. If successful, it would become the largest IPO in history, easily surpassing Saudi Aramco's previous record of $29 billion. What's equally unusual is how SpaceX is approaching the process. Instead of marketing a traditional price range, the company announced a fixed price before its roadshow. Despite the unconventional strategy, investor demand appear overwhelming. Reports indicate underwriters have already received roughly twice as many orders as available shares. The offering values SpaceX at approximately $1.8 trillion, making it more valuable than Tesla and instantly placing it among America's most valuable publicly traded companies. Yet the number reveals a more complicated story. SpaceX generated around $18 billion in revenue during 2025, but the company remained unprofitable, posting a loss of nearly $5 billion as it poured massive resources into artificial intelligence infrastructure and future technologies. The current backbone of the business remains Starlink. The satellite internet division contributed more than $11 billion in revenue last year and generated over $4 billion in profit. With more than 10 million subscribers globally, Starlink is currently the company's only profitable segment. However, bullish investors are betting on what comes next. Goldman Sachs projects SpaceX AI related revenue could explode from just over $3 billion in 2025 to more than $320 billion annually by 2030. Combined company revenue could approach half a trillion dollars by the end of the decade. Supporters call SpaceX a generational company poised to dominate both space and artificial intelligence. Critics, however, argue investors are paying today for profits that may not arrive for many years. Morningstar's valuation sits at just $780 billion, less than half the IPO target, highlighting concerns about competition, execution risks, and lofty expectations. For retail investors, there is another notable twist. SpaceX is allocating roughly 30% of the offering to individual investors through platforms such as Robinhood, Sophie, Fidelity, Charles Schwab, and eTrade. While some brokerages maintain strict participation requirements, others have significantly lowered barriers to entry. As the countdown to pricing begins, one question remains unanswered. Is SpaceX the next transformational technology giant or the most expensive leap of faith Wall Street has ever seen? The market will soon decide.